Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's March 20th. Hey, another day here with no economic news. It's good for the day. We get those starting tomorrow on. Um, However, so let's go ahead and take a look at the headline news. Stock market's up today, a little bit of a rebound after yesterday's losses. Uh, High technology kind of dragged the whole stock market down, specifically even Facebook. Facebook, my understanding, is still down for the day, taking a big brunt of the that what was Cambridge Analytica company being people's data being shared, and when it was thought to be destroyed, and it creates a lot of questions in people's securities and privacy. So uh, creating a big backlash for Facebook yesterday and going on in today. Today is the beginning of the FOMC's first day of meeting. They have a two-day meeting. They'll start today. Tomorrow around 11 o'clock Pacific Standard Time or 2 o'clock East Coast Time is when they give their announcements. Now, the big things the investors will be looking for, they are expected to raise a quarter point tomorrow, raise rates by a quarter. The big thing they're going to be looking for is, they're going to look at wording changes on, let's say, for example, inflation is going to be the big one. They're going to be looking to see if they're still using the word transitory for in terms of inflation, which they've been using for nearly a decade, which transitory means temporary, and well, this temporary has been around for a long time. Also, they're going to be looking at the dot plot maps. They're going to be looking to see if they uh, if they're forecasting more than three rate hikes for the year, or if they're looking at just the three rate hikes this year. So that's going to be another item they're going to be looking at today, or tomorrow rather, excuse me. So be careful heading into tomorrow. We could have a lot of volatility going into it. This could obviously affect both markets. If there's anything with inflation about heating up, that could spook both markets here, because that means the Fed will most likely be a bit more aggressive with their rate hikes, and of course anything with inflation with the with bonds scares them, and typically when we get these short-term rate hikes, that usually helps us out. But anytime there's talk about inflation, that will spook them as well, since it erodes the value of those bonds over the course of its time frame. Last but not least, they're expected to roll out. President Trump is expected to roll out $60 billion in tariffs against China. This is another item here that's going to be, looks like it's going to be rolled out, and again, they're kind of gearing up for a possible, trade war. So we are starting to see Europe begin theirs. It sounds like they're doing some type of digital tax tariff against our electric technology going over there, and then of course now we're aiming stuff at China as well. Again, it will be interesting to see how this all plays out. But for a global expansion, obviously that's what they're concerned for these multinational corporations. Whether it's good for America or not, I guess time will tell. Let's go ahead and take a look, see what the bond market is currently doing. Bond market is down for the day. Here's the 25-day moving average. We did test it yesterday, got pulled back. Today we're not quite there. We're still getting this, as you can see, starting to have this trend lower each day. We're starting the day lower, and we've risen up, but we're down lower here. Oh, actually, we didn't start lower here today. I'm sorry. We started a little higher, and we started. Now we're down lower. We're down about 17 basis points from where we left off yesterday, and that's going to result in higher interest rates today from where we left off yesterday. So obviously not a great sign for those who are looking to refinance or purchase or stuff like that. So again, be cautious as this 25-day. Oops, sorry about that. As this 25-day moving average coming down here, we got a floor here. It could push us further down, or we could have a bounce up. But chances are we could bounce further down as the trend is higher rates. So just be a little bit cautious going in there if you are in a transaction, whether it's refinance or purchase, and looking to get the better rate. Just be a little careful here. It's okay to float a little bit as we got a little more time, but as we could try to poke above that and see if we get a improvement. Or again, the other concern is here we're the 25-day moving average is being broken here by the yields. So if that stays, that could continue to push us down. So again, we're seeing the trend here. We're up to about 2.8, 8 or 8.9, I think. I forget which one it is. It's about to 8.89 right now so far this morning. and we're closing in. So if it breaks above this convincingly, this will now become a floor of support and could give us more of a bounce higher to the ceiling resistance here. All right, so be cautious again out there. So that's why I kind of say it's a little bit more inkling of us being pushed further down the bond market, further down while yields are rising, and creating higher rates in the long term, in the mean term. All right, you guys have a great rest of your day. But if you guys want more data, just stop by Twitter. You can follow me there. I do post throughout the day, different data. The market's going up or down and stuff like that. Any news that pop up, I'll post that as well. Just find me at Mike Bjork. I hope you guys enjoy the rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye bye.